Ladies and gentlemen, good day and welcome to Krsnaa Diagnostics Ltd Q1FY24 earnings conference call hosted by Equirus Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Bharat Celly from Equirus Securities. Thank you, and over to you, sir.
Thanks, Neeraj. Hello, good evening, everyone. Pleasure to have you all on the call. We have with us today Krsnaa Diagnostics Management, represented by Rajendra Mutha, Chairman and Whole-Time Director, Ms. Pallavi Bhatevara, Managing Director, Mr. Yash Mutha, Whole-Time Director, Mr. Pawan Daga, CFO. We will start this call with opening remarks from the management side, followed by a Q&A session. Thanks, and over to the management.
Thank you, Bharat. Good evening, everyone, and welcome to Krsnaa Diagnostics Q1FY24 earnings call. I thank each one of you for joining us today. We have already circulated our investor presentation, which is available on our website as well as on all the stock exchanges' website. I hope you all have had an opportunity to go through the presentation. I would like to address the current landscape of the diagnostic service industry and shed light on our company's position within this dynamic environment. As we all acknowledge, the provision of high quality and affordable diagnostic services stand as a fundamental pillar within the healthcare industry. It also plays a pivotal role in disease diagnosis, management, and prevention. In the Indian context, the diagnostic market is projected to reach approximately 1,360 billion by FY26, with a compelling compound growth of 14% anticipated in the years ahead. The diagnostic industry in India is being driven by various intrinsic factors, including a large population of around 1.4 billion, a growing elderly population, increased prevalence of chronic illnesses, higher individual income, improved insurance coverage, government initiatives, greater health awareness, and a focus on preventive care. The demand for accurate clinical solutions and better healthcare services is driving the adoption of point-of-care testing and home collection. India's demographic profile presents an untapped market for diagnostic services, offering opportunities for both organized and unorganized players. Governments at the central and state levels are exploring public-private partnerships to enhance healthcare and diagnostic services. Krsnaa Diagnostics, as a forefronter in PPP diagnostics, has established a strong presence across India, and our efforts ensure access to advanced, feasible diagnostic services even in the remotest regions of our country. Turning to recent developments, I am pleased to report a positive shift after encountering initial challenges in the new fiscal year. The esteemed High Court of Rajasthan has ruled in favor of Krsnaa Diagnostics and TCIL, mandating compliance with stipulated conditions related to additional performance security. Aligned with this judgment and as per the rulings, we have submitted additional performance guarantee required for the project, and we are hopeful to execute the agreement by end of this month. In the past 3 months, we have secured a significant tender in the state of Assam. This project encompasses a network of 10 laboratories and an impressive 1,256 collection centers, significantly bolstering our growth prospects in the northern eastern region of our country, where government healthcare holds a 80% share. Presently, Krsnaa takes pride in its leadership role as a PPP diagnostic entity, boasting 134 radiology centers, 1,370 telereporting centers, 105 pathology processing labs, and an extensive network of 1,336 pathology collection centers. Our unwavering commitment to serving the B2C segments remains at the heart of our efforts. We have thoughtfully introduced affordable wellness packages tailored to meet the diverse needs of our esteemed customers. I'm honored to share with you a momentous occasion marked by progress and commitment to accessible healthcare. Krsnaa Diagnostics, renowned for its innovative healthcare solution, proudly introduces its home sample collection services inaugurated by Punjab's Health Minister Dr. Balbir Singh. This forward-looking initiative enhances diagnostic service accessibility and promotes community health. The event, which was held on August 14, 2023 at Patiala, Punjab, marks a pivotal advancement in improving healthcare access across the region. This inauguration symbolizes not only convenience but also unwavering dedication to quality, precision, and affordability. We have not only launched this service but also established an efficient call center to streamline logistical, operational, extending support to patients in 6 locations at Punjab, wherein Amritsar, Bathinda, Mohali, Jalandhar, and Ludhiana. As a respected partner of the Punjab Health Systems Corporation, our commitment of providing state-of-the-art diagnostics and comprehensive healthcare solutions at discounted rates has significantly benefited Punjab's healthcare ecosystem. Furthermore, our dedication to embracing technology within our operations knows no bounds. In the first phase, we are actively implementing technology-driven initiatives, including digital pathology and integrated lab management. These endeavors are designed to augment our operational efficiency and elevate the quality of our services. Looking ahead, our confidence soars in our capacity to expand our geographical footprint and penetrate further into Tier 2 and Tier 3 cities. We are resolute in our commitment to provide high-quality diagnostic services at extremely affordable costs. Our recent center installations, triumphant tender wins, and our ongoing evaluation of pipeline projects all point to a future of promising growth. I will now hand over the call to Mr. Yash Mutha, our whole-time director, who will discuss Krsnaa's strategic plans and future growth prospects. Thank you and have a great evening.
Thank you, Ms. Pallavi. Good evening, ladies and gentlemen. I am delighted to present the impressive performance of Krsnaa Diagnostics during the first quarter of fiscal 2024. It brings me great joy to announce that our total revenues have surged to rupees 140 crores, demonstrating a remarkable 24% year-on-year growth. In terms of our normalized EBITDA, which has risen significantly to rupees 35 crores, showcasing an outstanding 22% year-on-year growth with a substantial margin of 25%. Equally remarkable is a normalized net profit, which stands at rupees 17 crores, representing a striking 19% year-on-year growth, accompanied by a corresponding margin of 12%. In addition, our regular EBITDA has reached rupees 32 crores, reflecting an impressive 13% year-on-year growth, accompanied by a margin of 23%. Our regular net profit has also shown growth, reaching rupees 15 crores, a 3% year-on-year increase with a margin of 11%. However, it is crucial to acknowledge that our profitability margins have faced some influence, deviating from the previous quarter's performance. This shift can be attributed to our ongoing expansion endeavors. These encompass various projects that, despite incurring higher expenses, are yet to contribute proportionally to the revenues. Nevertheless, we remain optimistic about a positive shift in the margins as these initiatives mature in the upcoming quarters. On an exciting note, I am thrilled to share updates about our growth trajectory. Over the last 3 months, we have successfully integrated 6 new pathology labs and established 252 pathology collection centers, all aligned meticulously with our expansion strategy. To propel our future growth and amplify our presence, we are deeply engaged in a comprehensive pipeline of projects. These ventures encompass pathology labs, collection centers, and even CT and MRI facilities across diverse states. This strategic approach empowers us to explore new frontiers and fortify our operations within existing states. We'd like to inform all our investors and stakeholders that based on the upcoming projects, including Maharashtra, BMC, Assam, and Odisha, along with the retail expansion, we expect to maintain our CAGR growth rate for the next 2 years. And with Rajasthan project being finalized, we expect that this growth rate for Krsnaa will be much higher than the CAGR growth rate. As we persevere with our ongoing initiatives and execute existing projects combined with recent accomplishments, our outlook for the future stands strong and resilient. We possess unwavering confidence in our ability to harness the substantial opportunities that lie ahead. Through these endeavors, we are poised to drive sustained growth and create value that resonates deeply with all our stakeholders. Now, I would like to hand over the call to Mr. Pawan Daga, our Chief Financial Officer, who will provide further insights into our financial performance. Thank you.
Thank you. Thank you, Mr. Yash. Good evening. Ladies and gentlemen, I will be presenting the financial highlight for the quarter that concluded in June 2023. In the first quarter of FY24, our total revenue from operation surged to rupees 140 crores, showcasing an impressive 24% year-on-year growth. Turning our attention to the operational aspect, our EBITDA reaches to 32 crores, signifying a commendable 13% year-on-year growth, and we maintain a margin of 23%. Furthermore, our net profit also demonstrated positive growth, touching rupees 15 crore, indicating a 3% year-on-year increase, along with a margin of 11%. During Q1 FY24, we have added more than 500 employees, and by the year end, we will be adding more than 3,000 plus employees pan-India, creating employment opportunity with our Let's Do Good mission. On the efficiency front, we have seen a reduction in receivable days going from 86 days in Q1 FY23 to 79 days in Q1 FY24, indicating improved management of our receivable. Taking a closer look at our balance sheet, we have a gross debt of rupees 50 crores while holding a cash and cash equivalent worth rupees 225 crores as on 30 June 2023. It's important to note that our company continues to maintain a net debt-free status, a noteworthy achievement. We can now open the floor for question and answer session. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Jainil Shah from JM Financial. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations on a great set of numbers. My first question is on Rajasthan tender. We were earlier expecting Rajasthan to start contributing 3Q. So any update on the timelines now? And also if you can call out what was the contribution of our earlier Rajasthan tender in our 1Q base?
Hi, Jainil. So with regards to the timeline of Rajasthan, the new tender contribution, we had anticipated Q3. I think that should just move on to Q4. Whilst we are trying our best to see if we can get this pushed by end of Q3 or earliest Q4. In terms of the contribution for Q1 of Rajasthan, was it this year you're asking or for the previous year?
Previous year, the earlier tender that expired.
20 crores.
Yeah, it was about 20 crores.
20 crores in Q1 FY23.
21 crores.
20 crores.
20 crores.
Okay. And the new centers that we've opened this quarter, just a clarification, how many have we opened and what is the costs and the impact on EBITDA?
So, if you see, we have added 6 pathology lab, 1 radiology centers, and 300 plus collection centers has already started functioning in Q1, and further 200 will be added in the July month. So, approximately 2.6 crore is estimated cost which we incurred. For that, their proportionate revenue has not contributed in the Q1.
Okay. And what was our capex outlay this quarter?
So, 31 crore is the capex for the Q1.
Okay. Okay. That's very helpful. I'll get back in the queue if I have more questions. Thank you so much.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello, sir. Good evening, sir, and thank you so much for taking a question. I hope I'm audible.
Yes, Darshil, you're audible.
Yeah. So I just wanted to know, sir, now with Rajasthan, I think finally, I think all problems have been solved. So, what kind of additional revenue would it kick in maybe Q4 or next year? And what would be our growth for FY24 and 25 we would be expecting? And what would be the margin range that, we can expect in FY25 and 24?
So, Darshil, 2 questions that you've asked. First is, what is the expected contribution in Q3, Q4 of Rajasthan? That we expect to it about 25 crores, which we expect in Q4 if the centers go live. If you could just repeat the next part of the question, please.
So the next part is, how would our FY24 as a whole look for us in terms of our revenue and margins, and what kind of growth will we have due to our new Rajasthan thing coming up? So how would FY25 look? Will we be able to do our stated 700 crores revenue, and what kind of margin can we expect during that? Hello?
Yeah. So, Darshil, in terms of the FY24 numbers, like we mentioned in our call today, we are confident to achieve the CAGR growth of almost around 30-35% in this FY24, and that is excluding Rajasthan. This is currently considering the 3 projects that are on live, 3 to 4 projects that are live. And for FY24, with Rajasthan coming up, of course, the growth rate will be much higher compared to what we will be demonstrating in this year. The margin profile for this year will be a bit impacted because there are implementations going on. But like we've been maintaining, we will continue to focus on maintaining the existing levels of EBITDA margins and not have them impacted severely. So pushing that the revenue is more in line with the expenses that are being incurred. The reason for, again, as we mentioned, the margins will be impacted is because by this end of the year, we'll be adding almost 3,000 plus workforce, and which will also, whilst we add them, but the revenues will not be commensurate. So we expect a slight impact on the EBITDA margins on a quarter-on-quarter basis as we keep on adding these employees. But we're equally trying to also ensure that the revenue ramp-up is, being pushed further to ensure that the dent or the impact on the EBITDA will be lower. However, on an annualized basis, if you see, we expect the EBITDA margins to be about the same 25% or try to improve from here on. I hope that answers your question.
Yeah, so I hope. So just for clarification, we said 30-35% growth, right, sir?
Yes.
Yeah. Okay. Thank you so much, sir. All the best, sir. All the best for the upcoming quarter. Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Kaustav from Das Investment Group. Please go ahead.
Hey, hi. So I just wanted to understand. So for the previous participant, you responded that you expect a 30 to 35% growth this year, and probably a bit of higher growth, maybe 35 to 40% for the next year. Am I correct? Then I can go on to the second question.
Sorry, we lost you in between. If you can just repeat the question.
So for the previous participant, you responded that this year the growth would be 30 to 35% over the last year, and FY25 will be another 30 or 35% over FY24. Is my understanding correct? The revenue growth.
Yes.
That will be without Rajasthan.
For this year? Yeah.
Hello?
So this year we are expecting 30 to 35% growth year on year, and next year, of course, with Rajasthan being added up, then the growth will also be much higher.
Got it. So now leave this year apart, because I understand that you'd be hiring few employees. So what would be the margin for the next year, like FY25, when everything has stabilized? What would be the margin levels? Like from our current margin level, what will be your margin level in FY25? Annualized, I mean.
Yeah. So on an annualized basis, we expect it to hover it around the range of around 25 to 30, and I would expect to settle down somewhere about 28% is what we expect it to achieve. But of course, our efforts will be to maximize the contribution from an EBITDA perspective with these projects stabilizing, and like we maintained, we try to aspire to bring it to 30%.
Okay. And what is the current margin right now? Just for booking it two numbers.
Currently, it's about 25%.
Okay, so you expect slight improvement if possible, or maybe maintaining these sort of levels for the whole FY25?
Yes.
Got it. Thank you. I will return back to the queue.
Thank you. Next question is from the line of Bhagwan Chaudhary from Sunidhi Securities and Finance. Please go ahead.
Yeah, thanks for the opportunity. So just one question. When you say that Rajasthan if comes into play, so technically what the hurdles is still remaining there to come this project online?
Yes. So, see, Rajasthan, what is pending is only executing the agreement. That is basically both the parties will sign. Now, since there has been a High Court order, the government has to follow their due internal processes to issue the agreement and get that executed. And like we said, we are hoping to get this executed by end of this month. I think after that, then we just basically go into the implementation phase. I hope that answers the question.
Yeah. Just one extended into the same that. Do you think that will there be any impact on the both parties' agreement and in the operations going forward based on this?
No, absolutely not. See, these typically, in tender, as we've seen, these are basically contractual commitments. Both the sides try to negotiate and also ensure that there is compliance. So likewise, both we, along with our consortium partner TCL, have kind of indicated that we are ready to comply. And at the same time, there were some technicalities in terms of interpretation of various sections and provisions, which led to these kind of situations. But I don't think so it impacts anyways our relationship with the authorities or the government, and neither does it impact, because at the end of the day, this is in the public interest, right? So. And considering our past experience in successfully delivering PPP across the country, this is also a testament that Krsnaa does deliver, and I don't see that should anyways impact our relationship.
And one more thing, the initial whatever work we were doing there, all that is on the stainless style, or we doing some work or some revenue contribution is there from the Rajasthan ongoing in the current?
No, as of now, from Rajasthan, there is no revenue contribution. What we continue to do is in terms of, let's say, evaluating the various sites that have to be deployed, hiring the initial leg of, let's say, managers. So those kind of activities are ongoing. We know these are part and parcel of the tendering process, so we don't just put a full stop to it. Until, as I said, we were confident and hopeful of the order coming in our favor, which has happened recently. So we are continuing our activities and looking forward to get this contract live as soon as possible.
And lastly, when you say that 25 crore kind of contribution can be in Q4, so what kind of revenue contribution can be in FY25 from Rajasthan?
So FY25, we expect Rajasthan to contribute about close to 300 crores, based on the Q4 numbers and our sizing of the project. So that is the number we expect.
Okay. Thank you.
Thank you. Next question is from the line of Amruta from Wealth Managers. Please go ahead.
Hello? Hello?
Yes, we can hear you.
Go ahead, ma'am.
Yeah. Thank you for this opportunity. So I have two questions. First is regarding the page 15 of the presentation. You have mentioned the monthly capacity and the annual volumes. So if you could just clarify how is the headroom calculated there?
I believe you're referring to the telereporting slide, right?
Teleradiology slide on page 15 of the presentation.
So this is basically the installed CT scan and MRI based on the last financial year FY23. Based on that, the headroom is calculated. We have an internal benchmark where every machine, based on their slice or Tesla, we have calculated our internal capacity. Based on that, we have derived this headroom over there.
Okay.
So just to add, basically it's a fraction of the installed equipment that we have, and at the same time we have capacities in the telereporting hub, including the number of radiologists as well as teleradiologists. So combination of all of this allows us to ensure how much capacity or headroom we have for further growth in terms of getting these scans reported through our telereporting hub. More so now, the telereporting hub, as we mentioned in the previous quarter, is India's first and foremost NABH accredited teleradiology hub. So we look into all these facts and aspects in determining the current scale of operations and the headroom for growth that will come based on these either new project wins or new tender wins that will be coming in the near future.
So for example, with the CT scans, you've mentioned 2 lakh monthly capacity. So the annual capacity will be around 24 lakh. And whereas FY23, the volumes are 9,17,666. So that means around 38% utilization. Am I right?
Yes.
All right. Then my second question is regarding what is the kind of capex that is envisaged for each of these, let's say, a collection center or a pathology processing labs or the CT or MRI centers. And in the PPP model, how does it work? As in, the center is set up by the company, and then do we get a grant for it, or it is totally financed by the company, whereas the revenue system, it is a revenue sharing model with the hospitals now?
Yeah. So, see, basically in any public-private partnership tender, the government publishes a tender laying out the specifications of the equipments to be deployed, the number of collection centers, and once we participate and win the tender, the government will give us space, which is typically like a bare shell space, where then Krsnaa goes and does the investments in terms of the the interiors, the ambience, as well as at the collection centers, setting up a collection center, including deploying the resources, a printer, and the necessary equipment and furnitures. So each of this, the investments or the capex involved varies from project to project and location to location. So it's not one answer that would fit, but it, of course, we look at all these various metrics when we decide to participate in any tender.
So then, it is set up by the company? As in, does the company receive a grant for it, or it is totally financed by the company itself?
No. Everything, the entire investment is done by the company. We don't receive any grants from the government. The government only gives us space, basically where we go and deploy or establish these collection centers. At times, there are electricity that is provided by the government to the site. From the site, then there are submitters, and per se, there are no grants or subsidies that we receive from any government.
Okay. And what is the kind of a patient profile that we have, as in number of walk-ins versus captive patients?
Could you just repeat that question, please?
What is the kind of patient profile, as in I believe we have normal walk-ins also in the the government hospitals centers where Krsnaa Diagnostics has set up the lab. So, as in, what is the kind of captive patients, as in the patients which are admitted in the hospital and they coming in and getting the test done versus any normal walk-ins that they have?
Yeah. So, see, typically, initially, you'll always have captive patients which are coming to the government hospital, and the reason why government publishes these tenders is because, there is absence of these diagnostic facilities or services. And once they're there, then you get a steady stream of these patients coming through. Over a period of time, because through our marketing efforts and when people get to know these are the kind of quality diagnostic services available at highly disruptive rates, you have even normal people coming in, walking into the centers. In some of our centers, we have even HNI patients coming in, and in some centers, the walk-in ratio could be as high as 50 to 70% compared to the government walk-ins. So it varies to state, and as we've seen over the years, as the center matures, you'll have a healthier contribution coming from the walk-in patients as well.
So currently, what could be the rate? As in, if you say company-wide average rate?
At a company-wide, it could be about 30% would be private, and government would be about 60 to 70%.
Okay, thank you.
Thank you. Next question is from the line of Aditya Khemta from InCred PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. Yes, just clarification. I thought originally when we were discussing the Rajasthan tender, at least our impression was it was a 450 crore contract over 3 years, equating to 150 crore revenue each year. But you just said on the call that in FY25 you expect 300 crores from Rajasthan tender. So just wanted some clarification there.
So, Aditya, see, what we stipulated earlier was based on the tender. Now, if you see the overall tender size, the number of collection centers that have increased, based on that, we are assessing that this could be the potential size of the tender on an annualized revenue basis. Of course, as normally government, when they quote the tender quantum, they do it based on a conservative basis, whereas when we've done now our initial surveys as well as the number of collection centers, we believe this could be a good number to achieve and, a realistic number to achieve. Also, considering that, the number of districts that have been added, those have also been substantially added. 36 districts are being currently added. So I hope that answers your question, where it's a combination of number of centers that have increased as well as, number of collection centers that have increased, which gives us, the estimation of the value of the tender.
Sorry, Yash. So what was the original number of districts to which 33 were added?
So if you see, Aditya, recently government of Rajasthan, where the earlier districts are 36 only, so which has increased to further 50 districts now in total. So based on the districts, the government will increase their infrastructure or improve the labs, or the big lab may be proposed over there. So that is under discussion. Post our agreement, we will able to answer your detailed answer on this front.
Understood. No, that's fair enough. Just on the second part, your guidance is a little confusing, so I just want some clarification there also. So in terms of, and this is just the top line margins, I know, as we receive the tenders, the operating leverage will slow. But on the guidance standpoint, excluding Rajasthan FY24, you are indicating anywhere between 30 and 35% top line growth. And then in FY25, another 30-35% growth, again not including Rajasthan.
Correct. If we add Rajasthan, the growth, CAGR growth, or the growth will be much higher. Without Rajasthan only, next 2 years, we can see a CAGR growth of 30 to 35%. Considering the projects already in hand of Assam, Odisha, BMC, Maharashtra, or if we add Rajasthan, the growth rate much higher.
Understood. So 30-35% growth for the next 2 years is ex-Rajasthan, and then in the FY25, we need to take Rajasthan over and above this 30-35% growth in FY25 on the FY24 sales number, correct?
Yes, correct.
Okay, awesome. Just another question. So you said you're adding a lot of people. Now, this is something which confuses me about your business model. So these tenders that you get, these are 3-year, 5-year, 10-year tenders. But you hire employees on your roll. We know many other companies who do similar government businesses, and they try to cut corners by taking contract employees and, keeping the model so-called quote-unquote asset light, so that they don't have the obligation of, the employee's future and his welfare. and then retrenchment in case they lose the contract. So just talk to us about how you manage this here. I mean, this is something which is really, really commendable because it does well for the economy, but I'm just confused as to how it serves the purposes of our company. So can you just talk us through this?
Yeah. So Aditya, basically, when we spoke about adding these manpower, these are basically a part of the tender requirements as well, where we are supposed to, deploy these resources, whether it is a lab technician, a collection boy, or whatever. Now, typically when we participate in these tenders, we understand, that the government is looking both from not only from a service delivery perspective, but also to generate employment opportunities for the people, of that geography. And when we consider these tenders now, even if you consider 3-year horizon, the employees who are also onboarded know that this is from a tender perspective. And given that, tenders get renewed or we have an extension, so I don't think so from an employee perspective, they see this as a continuum. From a cost perspective, yes, we also try to see how do we optimize the resources. Now, just to give you a very ballpark number, if you see we have about 1,500 collection centers to be deployed. Even if I could just recruit one person there, that itself means about 1,500 people to be added, and which is required because for a collection center you need resources, to collect the samples and then do the rest of the processes. So it is part and parcel of the overall business metrics or the financials that we look into. And of course, from a process perspective, we'll try to, like you suggested, whether it is contractual employees or not, that we decide based on the merits of the tender requirements and as well as our optimizational or these efficiency initiatives that we drive across the company.
Got it. Just one last question from my side, and then I'll turn over to the other participants. For FY24 and 25, what is your expectation in terms of CapEx? So how much capital expenditure do you expect to incur in FY24 and 25 given the current contracts that you have?
So the capex requirement for 24-25 will be in the range of 120 to 130 crores.
120 to 130 crores. But that, I think, more or less, you will be able to meet your operating profits given the growth that you are alluding to. So the current 220 odd crores of cash on the balance sheet, what do we intend to do with that? How do we intend to utilize it?
So, which will be for our working capital requirement, which like we will be deploying. Last year, we deployed two major projects. So this year, if we consider the full-fledged or the state-level projects like Assam, Odisha, total 5 big projects we are deploying this year or maybe continue part in the next first 2 quarters in the next fiscal.
Mm-hmm. Mm-hmm. Okay, I'll get back in with you. Thanks, Pawan. Thank you.
Yeah.
Thanks, Aditya.
Thank you. Next question is from the line of Shreyansh from SG Securities. Please go ahead.
Hi, good evening. I just had one question. So this is regarding I'm trying to understand the business model. Like, for example, we have a contract which is for a certain period of time and then it renews. So what kind of operating leverage do we see? And for example, if it does not renew, like what are the business implications for those, and how do you model the equipment that you need to purchase or work with that? And also, like, for example, the Assam contract, we already had one in place. So like, I'm assuming that you would get quite a bit of operational efficiencies because right now you mentioned there's a lot of setup costs going into the new centers, but the ones where you're able to renew contracts, what kind of benefits do you see in terms of financials in your contracts?
So there are 2 parts of the question. The first one is, how do these contracts consider? I mean, if you're thinking from a renewal perspective, typically these contracts have clauses, that the contract can be extended for a further period of 2 to 3 years or for a similar term. So these clauses are there, which allows us to extend the tenure of the contract without any additional investment that is required. We continue to operate. Now, in the case if the contract does come for, let's say, re-tendering after expiry of the period, like in the case of Rajasthan, given that we've already have an experience there, we've been there, so that gives us a certain edge over our competitors in terms of understanding the landscape as well as knowing the nitty-gritties of getting these contracts operationalized. the Assam example that you quoted, there were two different tenders. Assam, we were doing tele-reporting tenders, whereas now we've got the pathology tender. The leverages that we have there is, of course, when we are there and if such tenders come, we have deep insights in terms of, the operational metrics, the logistics that is involved, and that helps us to basically, when it comes to quoting the prices, it helps us to bid better for these tenders, and that is the advantage that we normally consider. Otherwise, per se, these are different contracts. They are, specifications are different. So it wouldn't, be on an apple-to-apple comparison to say that we get these operating leverages.
Okay, understood. So actually, I meant retendering. Like for example, it ends like there's a contract that ends. Like retendering, there has to be certain continuity, right? So if you win the contract, you don't have to go and set up the lab again, or have something absolutely new. That is what I was trying to understand.
It depends on project to project, because sometimes if there is as you mentioned, that if there is a retendering and if we won, yes, it definitely adds a lot of value to our previous work, what we've already done. However, whenever there is a new tender, what we've seen in the history of Krsnaa, either the centers are added or the locations are added or number of tests are added. So a little bit of revamp is definitely needed, even if it's retendering for the similar kind of project.
Understood. And lastly, for the machinery, how do you account for that in terms of like depreciation? Is it fungible for different projects, or like how's the MRI machines, and how do you look at that?
Yeah. So typically for the radiology projects, these are long-term projects, almost 10 years. So the depreciation also follows the estimated useful life, which is prescribed by the accounting standards, and accordingly it is depreciated. For pathology projects, depending on, again, the project size and the nature of the equipment that have to be deployed, we also depreciate over the period of the 13 years.
Because the equipment life are much higher than what we expect compared to project life. But the same equipment can be deployed at the other location, so same can be used. So the depreciation allows to carry up to 13 years.
Thank you. Shransh, sorry to interrupt you. I will request you to join the queue again for a follow-up question. A request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue. Next question is from the line of Manoj Dua from Geometric Securities. Please go ahead.
Okay. Sir, what would be the tenure of this Rajasthan tender?
It's about 5 years. 3 plus 2 years. So it's about 5 years.
Okay. And as you said, you would be doing capex of 120 to 130 crore in next 2 years. What would be that for Rajasthan tender alone?
Rajasthan, the total capex is envisaged to be about close to 200 crores.
200 crore. And total capex you said was around 120, 130 crores?
For each year, it will be in the ranges of, Manojji, it is really in the each year in the ranges from 120 to 130 crore.
Each year. Okay. And normally, when you say that when the tender is over, it goes for renewal or renegotiation of the contract. Is there any scientific method given in the tender itself, whether it will go for renewal or retendering, or any initially mention is there, or we see at that period of time what happens?
So basically, it is all depending on different contracts. Now, for example, Rajasthan, it is clearly mentioned that it will be 3 plus 2 years. Some contract says mutually extendable. Basically, they evaluate the project. But if it is coming to a renewal, there is also, according to the government law, they cannot extend it for a more tenure than prescribed. So then, eventually, they go for a retendering.
Okay. And for Rajasthan tender, is there any specific mention on the receivable days or something like that in the contract, or it is a part of the normal process as it goes?
There is no specific mention on the receivable days, but there are conditions, wherein the equipments, if let's say the government purchases, then we get it at the WDV value. So even the amount can be refunded back to us. So those are some of the conditions that are there in the Rajasthan contract.
Okay. My last question is, can you tell me about your two initiative or one main initiative of B2C, how it is going on?
Yeah. So on the B2C initiatives, we have two streams of initiatives. One is, of course, the wellness packages which we've started, and happy to say that we are seeing a lot of traction there. The Krsnaa has always been focusing on the so-called B2G business or the B2B, but with this focus on packages and the kind of successes we are seeing month on month, the numbers are increasing. So it gives us confidence, and that is the reason why we've also launched our home collection services in Punjab, which is another initiative which was also blessed and approved by the authorities of Punjab, wherein the health minister had came and launched these services, which allows us to go to the doors of the citizens of Punjab and provide them health collection services, which is over and above the patients who come to the government center. So I think from both these initiatives, we believe these so-called B2C initiatives are taking good shape, and based on the success and the learnings, we will be expanding these to other states, including Maharashtra, Odisha, and Assam, where we already have pathology labs. So, like we've been maintaining, we would want to leverage our existing network of labs and centers, and spread them more through these various initiatives.
Okay, thank you. I will join back with you.
Thank you. Next question is from the line of Rikesh Parekh from Rockstar Capital. Please go ahead.
Yeah, thanks for the opportunity. I will just like to understand, what is the status of our Punjab contract and how...
Sorry to interrupt you. May I request you to speak through the handset, please?
Sir, can you just guide us through what is the status of the Punjab project, and is it scaling up in terms of margin and the scale as we envisaged?
We see a good improvement in the Punjab, where the month-on-month or the volume and the revenue, all the front we are getting in good pickup, and we see we can deliver what we have estimated for the Punjab project.
But are we at the peak revenue, means reaching that level, or we are still year or that away as such now?
So we still not achieved our peak revenue, but we see a good improvement in the numbers, volumes, and the response we are getting from all the fronts, as the government also initiating a B2C, where home collections and other factors are already taken care by the authority. They are appreciating our services. So we see the peak revenue will be achieved very soon.
And in terms of BMC project, what we just recently won, and I think the handover has been quick, pretty fast, and deployment happening. And I understand there was some initial teething issue as such. So how is it ramping up, and how do we see that contributing to the overall numbers as such?
So if you could just repeat the question, please.
I just wanted to understand about this BMC contract, what we received, Janta Dawakana, something like that, where initially there was some teething issue in terms of the rolling out, and I think immediately the revenue it seems to have started since we have started operating a lot of centers. So when it will scale up, and how is it shaping up now?
So on the BMC front, like you mentioned, there were initial teething problems which happen in any PPP project. Now those are behind our backs, and the revenue streams are also increasing. We are also in the process of stabilizing the operations, given that there are number of centers, and we expect BMC to stabilize, by in the next quarter or so, where even our labs will start, supporting these extended number of collection centers which the government has added. So I believe it's a matter of time once these collection centers that the government has added over and above what was initially planned in the tender, and with the labs coming up, these will stabilize the operations, and we'll start seeing a mature level of revenues coming from the BMC tender.
Okay. And the last question on the B2C side, how much it would have contributed in this quarter as such, B2C?
On the B2C, you're asking?
Yeah.
Right, yeah.
So it's one or...
B2C would not be very significant contribution in this quarter. As I said, since we've just started these initiatives, it won't be a very meaningful contribution, but we expect this to grow along, with now the call center coming up in Punjab, collection boys being deployed and the government also blessing it. So we'll see a gradual uptick in this B2C model. As I said, we are also testing various hypotheses when we are going into the B2C model. But whatever initial successes we had in this quarter, it seems very promising, and we look forward to more contribution coming from this segment going onward.
Thank you. That's it from us.
Thank you. Next question is from the line of Amol Rao from Kitara Capital. Please go ahead.
Hi, Yash, Pawan. Couple of questions. One is good quarter's performance, but since Rajasthan dropped off the extent of 20 crores year-on-year, what contributed to this growth? So 140 crores, could you break it down?
Amol, sorry to interrupt you, but your audio is not clear. Can you please speak through the handset?
Yeah. Am I audible now?
Yes, slightly better.
Yeah. Okay. Yash, Pawan, could you account for how this growth came about? Which orders are contributing to this growth in this quarter? Because Rajasthan has dropped off year-on-year to the extent of 20 crores. So how have we got this growth? Which orders have ramped up for us really well?
So what has contributed in this quarter, in spite of the Rajasthan dropping off, is our projects in Punjab, Himachal Pradesh, which are ramping up, and they have started contributing more mature revenues, which has compensated for the loss in Rajasthan as well.
All right. And going forward, if I got it correctly from you, you said the ramp up will continue in Assam, Orissa, the BMC contract, and the Maharashtra government contract, which should drive growth from here on with this base. Is my understanding correct?
Correct. So Assam, Odisha are yet to get operationalized in the truest extent. So as they start operationalizing and the ramp up happens, they will contribute additionally to whatever we are doing as of today, and along with BMC and other centers as well.
Got it. And just in a very quick nutshell, this capex that you mentioned of 250 crores, this is all accounted for through our cash code right now, right? So we have no funding requirement, no debt requirement as of now, unless some new tender comes up, which we decide to participate with, right?
Yes. So whatever capex that we plan, currently we envisage it through our internal accruals, and some of it coming through vendor financing, where they give us equipments on a deferred payment or the lease. So those are the sources of financing, but it is majorly, predominantly only through the internal accruals. We don't expect to raise any debt or, unless a new tender warrants it so.
Got it. Thanks, sir. Thank you, Pawan. Wish you all the best.
Thank you.
Thank you.
Thank you. Next question is from the line of Puneet Mittal from Global Core Capital. Please go ahead.
Hi, thank you. Just two questions. One is, when you say a ROCE on matured centers is 32%, how do you define matured center? At what stage do they become mature?
So mature centers are having their respective age life more than 3 years, which we call as a mature centers.
Yeah, but as you mentioned before, that most of the contracts are 3+2. So is there a very short period of maturity of these centers?
No. So what we refer to 3+2 is largely for pathology projects, whereas what you see in the existing ROC are predominantly our radiology businesses that we been doing for the past many years.
Okay.
And majority of our business today still is radiology driven, which contributes to the overall almost 60-65% of our business comes from radiology, where the contract period is about 10 years.
10+2.
Okay, got it. Makes sense. Second question is on the operating cash flows. Last year, your operating cash flows were a little subdued because of the higher working capital. For next 2 years, given the revenue and EBITDA margin that you highlighted, what do you expect to be operating cash flows for the next 2 years, FY24?
So operating cash flow for this year, we see precisely in a similar line what the last year, because the capex requirement in terms of from internal accruals where we're going to deploy for new projects of Assam, Odisha, and later for the Rajasthan pathology. So we see this year at least similar kind of working capital requirement.
You mean in percentage terms, not in absolute, right?
Sorry?
Could you repeat that?
I mean, when you say the operating cash flows should be similar as last year, naturally your EBITDA would be much higher this year given the growth. So your operating cash flow would be, conversion of operating cash flow to EBITDA would be similar as last year. Are you saying that?
Yes, yes.
Okay, great. Just one last clarification from what you spoke to previous participants. If you look at the revenue growth that your top line growth that you suggested of 30-35%, and then you add up the Rajasthan, it goes almost up to 1,100 crores by FY25. Is that the right understanding?
Yes, see, we aspire to be there, and based on the projects in hand, we believe those are some of the estimates or expectations we could achieve, and we've been consistently saying that that is a target we are set out ourselves for. And now with the project in hand, we have a certain level of certainty towards achieving those numbers.
Okay, great. Just one last one. Is there any new bigger tenders in pipeline that you have, or currently focused on just these ones that?
So there are a couple of projects or tenders that are in pipeline, and as and when, of course, we would participate or they come to further stages, we will keep you all informed. But we continue to seek opportunities, over an existing projects that we have signed up for.
Thank you so much, and all the very best.
Thank you.
Thank you. Next follow-up question is from the line of Aditya Khemka from InCred PMS. Please go ahead.
Yeah, hi. Thanks for the follow-up. Yes, so on Rajasthan, you said total capex will be 200 crores. And in the next, in FY24-25, the capex guidance is 120 to 130 crore each year. But in FY25, we are saying Rajasthan will contribute 300 crores of revenue, which means that the entire 200 crores of capex for Rajasthan should be done before FY25. So I'm slightly confused as to how much capex to have you already incurred for Rajasthan. And could you just clarify at what time would you incur how much capex for Rajasthan? And is my understanding correct that if you get 300 crores of revenue from Rajasthan in FY25, then all the capex for Rajasthan needs to be done before FY25?
So, Aditya, if we see the project deployment will start once the agreement executed. So in the Q3 or Q4, we see some amount of capex to be incurred for Rajasthan, and balance will be incurred in first quarter of next year, FY25. So this is an expected timeline and the projections of ours which drive the project further.
So Pawan sir, then that means that within second half of FY24 and let's say first quarter of FY25, you will spend total 200 crores of capex and all of it will be Rajasthan.
Yes.
Okay. So in projects excluding Rajasthan over FY24 and 25, we are spending only 50 crores or 60 crores of capex.
Yes.
Okay. And is this number seems relatively low? Is this low because we are taking more equipment financing, or is it because most of that capex is behind us for the other projects other than us?
Sorry, Aditya, could you just rephrase the?
Yeah, I'll rephrase the question. So over 2 years, which is FY24 and 25, we are spending total capex of 250 to 260 crores, right? It's 120 to 130 crores each year. So over 2 years, the total comes to 240 to 260 crores. Right? Now, of this, 200 crores will be Rajasthan. So the capex on the other projects, which is, let's say, Odisha, Assam, Punjab, what have you. So on those projects, we are spending literally only 40 to 60 crores, in addition to what we have already spent on this project. So what I wanted to understand was that for the... Yeah, go ahead.
No, so Aditya, I think that's a fair question. If you see, like in this quarter, we've already invested about 30 plus crores. Some of the investment has already been incurred. And considering that these are pathology projects, some of the equipments we're also trying to see if they come on a deferred payment basis, or as I said, so those are the ways we are trying to look into it, where it flows in terms of how the project gets implemented and the cash flows. But what we've spoken is these are the projects like Rajasthan, where we have to deploy the equipments entirely, and hence that is the outflow in terms of capex that we'll have to do.
I got it. Sorry, I got it. Thank you. Thanks for that clarification. Secondly, on the secondly, on the tenders that you keep getting renewed, I think one of the concerns that most investors have is that because tender lives are between 3, 5, and 10 years, depending on whether they are pathology, radiology, in which state. Could you talk to us about, you have been doing this business now for more than a decade. So, for more than a decade now, how many tenders have you got successfully renewed, or you have won in the rebidding, versus how many instances have been where you have actually lost the tender, or the tender has not been renewed by the state government? If you were to give me a certain percentage, a ballpark percentage, as to this percentage of our tenders we keep getting renewed or we keep winning in the rebidding, and Y percentage of tenders we try to rebid but we couldn't win, or the government just didn't float the tender again.
Yeah. So, Aditya, out of the tenders that have come for renewal, if I have to just give some recent, we have probably won all of these tenders, whether it was, the HP or Assam, teleradiology, even if you take Rajasthan. So, whilst I don't have the exact number in terms of how many tenders, but broadly, given our experience, and like I mentioned, since we already have a lot of information and insights there, we have the ability or an edge over the competitors to win these tenders and continue. As of now, most of the tenders being radiology, so they have not yet completed their tender, but wherever these tenders were there, whether it was pathology for Rajasthan or teleradiology, we have won these tenders and we continue to have an extended period.
Understood. Thanks, Yash.
So, Aditya, clarifying your capex query. So 31 crore we already spent in the Q1. So further in next 3 quarters we will be spending around 120 to 130 crores. And next year the capex requirement is 120 to 130 crores. So if we go precisely 290 or 300 crore of a capex, out of that 31 is already spent and balance can be spent as I mentioned the breakup.
Understood, Pawan. This is helpful. Thank you.
Yeah. Thank you, Aditya.
Thank you. Next follow-up question is from the line of Kaustav from Das Investments. Please go ahead.
Hey, hi. I had a couple of 2 questions. So basically, for the B2C side of business, what is the pricing model? Like, how much do the customers need to pay? Like, is it the same CGHS rates, or like, is it higher than what is defined in the contracts with the government? So what is the pricing that customers pay in B2C?
Yeah. So in B2C, again, there are differentiated models, but predominantly what we are coming out is where our prices will be slightly higher than the government rates, because of course, there are marketing efforts, there are franchises in between. So to the extent of 10 to 20%, they'll be higher than the CGHS rate, but they are significantly lower than the existing market rates. And that gives us, what we've seen initial successes on the B2C model as well.
Okay. And suppose there is a private walk-in, like someone comes to your center. So is it same, like the rates are like 10-20% higher, or in that case you follow the government rate?
No. So see, there are 2 streams. If the patient comes to a government center, they have to stand in the queue, submit the necessary documents, and they'll be charged the government rates. But if they go to, let's say, a facilitation center or like a franchisee or a home collection, there they have to pay a slightly higher amount, which is because of the services that they're getting at the doorsteps.
Okay, got it. So okay, and one more thing on the similar line of question. So basically, if a customer is going and walking to your center, so he or she makes the payment, or is it like you keep a mark of it and government finally does the payment? Like who is doing the payment in this particular case?
So if a patient or a customer comes to a government center, and if he avails under any government scheme, and if, for example, certain states provided under the free diagnosis scheme, then entirely is free for the patient and the money gets reimbursed to us by the government. In states like Punjab or other states where it is purely cash, the patient comes and pays us the cash and we collect the cash and account for it accordingly. So it varies project to project and state to state.
Even after that, if the patient who's not availing any free diagnostic scheme or he don't want to wait in the queue, so patient has to upfront pay at a center and avail the services with the same pricing.
And for B2C, it is purely cash collection model as of now.
Got it. This helps. So I understand this side of the business. Now, I just have a bit more on the B2C side of the business. So, do you operate in a franchise model, or like how do you do it? Like, do you give franchise to someone, or is it like your own stores?
No. So we've started the franchisee model. Like we said, there are already established franchisee players in the market. We studied them and we came with our own unique, what we call as Krsnaa Business Associate, which is essentially a franchisee with certain differentiations. So these franchisees basically help us collect samples in the periphery of our labs or help them get patients to our centers. That is something which is already in process or being implemented. Along with this, we started home collection services in certain of the geographies where we have, let's say, the lab footprint. Punjab being the recent case, where now we have a dedicated team as well, including a call center. And that will allow us to further spread the assets and get more samples processed at our labs and contribute to the revenue.
Also, we have started our home collection services in Maharashtra, where Pune, Mumbai, Nashik, Ahmednagar, Kolhapur locations.
Okay. So all of the so basically franchises help you to collect the samples, right? All of the labs are owned by Krsnaa itself. Is my understanding correct?
Correct.
Okay. Got it. And lastly, you could introduce some apps or something so that people can start ordering, like for example, Thyrocare or Dr. Lal Path Labs try to do it through a mobile-based kind of infrastructure. So, but I didn't find anything like those kind of interfaces were not available for Krsnaa. Do you think you might be thinking on those lines, like developing an app so that you can get the bookings? At least the app should be live in those locations where you already offer the collections, like B2C collections.
So if you see, first of all, we have an app both on the Android and iOS. But bulk of our target audience is, segment is where they don't use the app. But now, considering the B2C, we already have started the app. In fact, we have many features which are, not there in the peers, including, having reports available for 6 months and for the entire family. So we have an app and people are using it. And as and when, as we said, we start having more of these B2C models, you'll have more visibility seen of the app as well.
Okay, got it. And just a last thing. So once the tender is like between renewal and between stopping a tender, for example, this Rajasthan case, do you need to dismantle all of your stores and then create a new fresh lab when you re-win the tender?
See, when it is a transition period, normally the government allows us to continue providing services and until the tender process is completed. Now, if the tender process is completed, these equipments are owned by us and we can transfer the equipments to wherever we believe they can be put to use. The rest of the whatever investment would have been anyways, which was recovered over the duration of the contract, considering our payback period, whether it is for radiology or pathology. And if we let's say rebid and we win the contract, then we can leverage the existing infrastructure that has already been put in place.
Thanks a lot. That's from my side.
Thank you. Next question is from the line of Manoj Dua from Geometric Securities. Please go ahead.
Okay, I have two questions which are connected together. Like what are your filter criteria for the tendering process? Which kind of tender you process or which you leave it? Because one of the biggest problem in pathology, what I am saying is we have a great model that we have acquired customer, like lock-in customer, but the mature period is 3 years and we see the tender tenure is 3+2 or something like that. So when we tender, when we see our bidding for the tender, what are our criteria and what are our learning from last 2-3 years?
Yeah. So in terms of criterias, I would just probably split that. For radiology, if we see, we normally participate in tenders which are through NHM, National Health Mission, and the state. We do not participate in any tender which is just driven by the state. And of course, then the financial metrics, in terms of EBITDA, the profitability, the tenure, the investments, all of this is being seen. Pathology, because the investment is low and you have the revenues are multifold of the investments, and therefore even if they are for a lesser duration, but we are able to recover the investments, and hence they are seen differently.
Also, Manojji, if the maturity for the pathology center is started lesser compared to the radiology, which if you're correlating with the presentation where we talk about the mature centers in the range of 3 years, so where majorly fall under the radiology centers. If we consider our semi-matured or matured, so it will now see a significant change over a period of time because of the pathology contribution has slightly increased compared to earlier.
And in terms of the second part of the question, in terms of learnings, so we've seen this overall PPP space evolving over the years, and differentiated models coming up, as well as as I mentioned, we only focus on NHM driven tenders, and at the same time Krsnaa was earlier strong on radiology. We are also now equally, and which we've been maintaining, we want to be strong on both pathology as well, which is a well diversified business if you see from a split perspective. So those all learnings have been deployed across these various projects, and of course we would want to continue this momentum going forward as well. I hope that answers the question.
Yeah, perfectly. So my last question is regarding vendor financing. I think it was mainly for radiology. Any vendor financing you are using for pathology or something like that? Can you give more color for that?
Yes. So like we have done for radiology, equally for pathology, and especially for these large projects, we are currently in discussions with the vendors as well, where we could procure these equipments on a deferred credit basis, on a deferred payment basis, as well as some of like on a leasing. There are already established reagent rental models, but we are trying to come up with some more better models to suit our line of business.
Thank you, and best of luck for exciting next 2 years.
Thank you so much.
Thank you. Ladies and gentlemen, we'll take that as the last question. I will now hand the conference over to Ms. Pallavi Batevara for closing comments.
Thank you. Thank you everyone for joining our Q1 FY24 earnings call. I hope we've been able to answer all your questions. In case any questions remain unanswered, please feel free to connect with our investor relations head, Mr. Vivek Jain, and team at Churchgate Partners. We look forward to interacting with you in the future quarters. Thank you and have a great evening ahead.
Thank you very much. On behalf of Q1 Securities Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.
Thank you.